from energy to AI to robotics to EV to space to 5G, 6G, all of these things, biotech, all coming together, genetic sciences, to create this fastest period of technological change in all of humanity. We're about to start moving towards macro summer. What is macro summer? Macro summer is when interest rates are falling, inflation is falling, and growth is picking up. That's the kind of holy grail for macro and for investing. And we should be in macro summer for all of 2024 and into 2025. And so my forward-looking basis is that the economy picks up, inflation keeps falling. I think it'll overshoot to the downside, which is the opposite of everybody else's narrative of sticky inflation. And I think markets are already showing you how excited they are about this idea, because we've just gone through a ridiculous rate cycle, kind of an unprecedented rate cycle on the back of the unprecedented inflation. That inflation, I think, was just driven by the pandemic. If you shut down, all demand and shut down all supply and then bring it all back on at the same point, you create chaos. Exactly the same happened after World War II. After World War II, suddenly everyone came back into the labor force and factories had to retool from making munitions to making cars and washing machines and whatever. And we got a massive inflation then. But then what happened is it worked its way through and we just had strong growth going forward. So problems with the economy is it's not growing fast enough to pay the interest on the debt. So if the economy on average is growing at 1.75%, and let's say interest payments on debt is about 2%, and the government's 100% of GDP in debt, that's all of GDP just to pay the debt. So what you need is to grow GDP. And to grow GDP, you either need the population to grow, well, that's not going to happen, or we need productivity to grow. That's technology. So productivity growth is what I'm really looking at. And it's not this cycle story, but by 2030, we will see AI solve for both problems. AI and the robots are new demographics. They're new productive units in the workforce of infinite scale. So we can now have an infinite population of productive people in inverted commas, and that will start driving productivity. The next part of the equation is we need to bring the cost of energy per unit of output down. And it won't come out of fossil fuel markets, it'll come out of renewable energy plus nuclear energy. If you lower the cost, the average per dollar barrel of oil price over the last 60 years has been about $40, inflation adjusted. But if you change to a new source of energy or bring in other sources of energy to make an excess abundance of energy, and you bring it down to $40, at $10, that has a massive multiplier.
Did we already have the recession? Because I have a lot of folks on this program and they keep forecasting a recession. And so I just want to hear more on that. Did we already experience it? And I guess we got through it. Or is that still in the cards?
The answer is I don't know. I think we've had a rolling recession through different parts of the economy at different times. Truck drivers, huge recession. Car companies, big recession. There's a bunch of indicators that show that. The tech companies, don't forget, they laid off all of their staff beginning of the year, and continuing claims are rising again. So somebody else is laying off workers now. So I think it's been ongoing, but I think this quarter and next quarter will be the weakest because the ISM is at its lows and the ISM is at levels, which is the best indicator of the business cycle, is around 46, which has historically given us a 100% chance of recession. So I think we're probably in a recession, but it's been this kind of rolling recession. So my view was always it's never going to be a bad recession. It'll more be like 1990, which is a mild recession, but with a lot of overhangs afterwards. Commercial real estate being one. Unemployment will be stickier than people expect because of the rise of AI and other things. But I think the markets priced it in, the forward-looking markets priced it in last year. Crypto was down 80%, NASDAQ was down 38%. And then I think that the other markets like the Russell 2000, the oil markets, copper markets, all of that stuff is pricing it in today.
I want to hear more on the inflation side of things.
Yeah, from our work, we put together, for example, the last 5 major inflations since World War II, and then just mapped this current one against it. It's identical. They all kind of are the same thing. They go up and go down. It looks like Mount Fuji. It's almost symmetrical. We're seeing it already in Europe where PPI numbers, Norway hit a negative 42% PPI. I mean, this is staggeringly disinflationary or deflationary. So my view is that when we see the kind of November, December inflation numbers in January, we will start to see inflation at 2% or lower. And that will continue, I think, to potentially deflation in the headline numbers. The core inflation and headline inflation is actually driven not by commodity prices and all of this fast-moving stuff. It's actually driven by two things: wage increases and owner equivalent rents, both of which are going down, are deflating. And all the forward-looking indicators suggest that they are likely to go negative. So I think there is a chance even of core inflation going negative in 2024, which is very much the opposite of what anybody else's view is. Most people, I think there's myself and Alex Gurovich are the only two people who've got this view. Almost everybody else thinks we're going to see sticky inflation. I just don't think we will.
Do you see false narratives out there in the macro space? Any that stand out to you?
There's a lot of false narratives in macro, and a lot of it is based on politics. People put their political views into their economic views and then create market views around them. So there's a general desire for a recession and markets to fall. And that's driven by people who are really all about how is inflation created? The central banks have destroyed our world, and I want to show everybody that it's happened. Yes, the central banks have destroyed our world, but not in the ways that they think. We've had the use of the balance sheet for over a decade now, and in Japan even longer. It never generated inflation. But they want that inflation because they want to prove that the monetarism is the kind of holy grail that they worship. And it's the people who worship Volcker, for example, come with different angles. So a lot of people are imposing perspectives that they hold from political opinions. And so the narratives become overwhelming. And I've actually gone on Twitter and said, okay, if you think sticky inflation, how do you vote? Sticky inflationists are Republicans because of the construct of how people see the world. What I try and do is not look at that. I mean, at Global Macro Investor, we have 2,000 charts, and we just try and use the data and not impose our own views on the data and see what that comes out with. And that gives us the high probability that inflation just reverts back to 2% or lower. Doesn't mean I'm definitely right, but it comfortably gives me a decent probability, I think. So if you think of GDP as all of the money circulating around to pay for the debt, there's no more money left over. But the problem is the private sector is over 100% of GDP in debt in every major country. So who pays for that debt? That's when they started shoving the interest payment debt onto the balance sheets, because the world basically hit the tipping point in 2008, and people still haven't worked this out. But I think I was the first person, and still maybe the only person, who's gone back and calculated all of the interest payments and realized that they are, and the balance sheet growth, and realized that they are just 3.5 years apart. It's the same chart. They just keep monetizing it. And that's the way that they see out of the debt, is to mutualize those payments across everybody by increasing the balance sheet. But the debt doesn't go away because GDP is not growing fast enough. So you have to change the GDP formula. If not, you're in this endless trap where you're printing more and more money, making the rich richer, the poor poorer. And I think that for individuals, as I said, there's only two assets that outperform this. That's technology and that's crypto. People are waiting for a collapse and markets down 80%. It can't. The reason it can't is the central bank debased the currency and it makes the stock market go up optically, because they can't allow the collateral of the system to go bust. So they don't allow the system to go bust, and it creates this ongoing problem. But if you listen to the narratives from the central banks and the governments, what they're really saying is the whole green energy revolution. Europe is massively funding this. And yes, it's good for the planet. Yes, it's good for a number of things. But really what they're trying to do is lower the cost of electricity. Because if you lower the cost of electricity, it has this multiplier effect on productivity. And that's how you can grow GDP growth. The other thing is population. Well, we're shrinking populations, as I said, so we have to replace people. So look at Amazon warehouses. The growth is not in people, the growth is in the robots. The robots work 24/7, 365, they never complain, and they cost a fraction of a human. We had the nuclear bomb of deflation, which is human knowledge, lawyers, doctors, accountants, creative artists, developers, everybody, and they're replaceable via the infinite knowledge machine that is AI. So that's scary for us as individuals. But if population growth is a large part of the components of GDP growth, you can create infinite people by the robots and AI. So there are schools of thought, even coming out of Oxford University, that says we could hit a tipping point where the GDP of the planet doubles in a year or even a week. Now that sounds extreme, but if you put infinite people or infinite productive units into the economy, you can make infinite goods. Now who pays for the goods? Maybe the machines pay for the goods. We don't know. This is a whole new economic system being built in front of our eyes. This is something I call the exponential age, which is where all of these technologies are coming together, from energy to AI, to robotics, to EV, to space, to 5G, 6G, all of these things, biotech, all coming together, genetic sciences, to create this fastest period of technological change in all of humanity.